Euro technical analysis. Euro to Japanese yen heads towards range top. Euro to US dollar consolidates. Euro to pound sterling breaks Suppo. Advertisement. There has been considerable divergence among the three major euro crosses over the past week. The fact that euro to pound sterling, euro to Japanese yen, and euro to US dollar rates haven't traded in tandem suggests that the euro is not in the driver's seat. Factors influencing the secondary currencies are proving more impactful. For euro/GBP rates, which just hit their lowest level since February 2020, the focus remains on the growing chasm between Bank of England and European Central Bank rate hike expectations. The former is expected to raise rates several times this year, while the latter has been insisting that policy tightening will not commence. For euro/JPY rates, the end-of-year surge in risk appetite coupled with the rise in bond yields at the start of 2022 has depleted demand for the Japanese yen, allowing the pair to return to its pre-COVID-19 Omicron variant concern levels seen in mid-November. For euro/USD rates, rebalancing positioning in the futures market coupled with December and January seasonality factors have made it difficult for the US dollar to break out higher, even as Federal Reserve rate hike expectations have risen in recent days. Accordingly, as noted in late December, the euro unappealing in the short term, setting up sell the rally opportunities across euro to Japanese yen, euro to pound sterling, and euro to US dollar rates. Traders may want to take a different strategy approach to each of the three major euro crosses, however. Given the performance in the short term, euro to US dollar rates have spent the better part of the last 2 months trading in a descending triangle pattern, which in context of the preceding move a downtrend, eyes a continuation effort lower. Selling rallies has been fortuitous, insofar as the pair has not been able to make a decisive break above the descending trend line from the 2008 and 2014 highs. Momentum has flattened out in recent weeks. Euro to US dollar rates are intertwined among their daily 5-, 8-, 13- and 21 EMA envelope, which is in neither bearish nor sequential order. Daily max rise towards its signal line has been stunted, while daily slow stochastics are still dropping towards their median line. Selling rallies against the yearly high at 1.1383 remains favored, ultimately targeting the 61.8% Fibonacci retracement of the 2017 low/2018 high range at 1.1187 in the near term. Euro to US dollar. Retail trader data shows 58.51% of traders are net long, with the ratio of traders long to short at 1.41 to 1. The number of traders net long is 11.35% lower than yesterday and 3.04% higher from last week, while the number of traders net short is 11.77% higher than yesterday and 0.55% higher from last week. We typically take a contrarian view to crowd sentiment, and the fact traders are net long suggests euro to US dollar prices may continue to fall. Positioning is less net long than yesterday but more net long from last week. The combination of current sentiment and recent changes gives us a further mixed euro to US dollar trading bias. Euro to Japanese yen rates may have established a short-term double bottom at an area of confluence channel support in place going back to April, and the multi-decade descending trend line from the July 2008 and December 2014 highs. The break above 129.65 sets up a double bottom target at 131.92. In the near term, a move slightly higher towards the 23.6% Fibonacci retracement of the 2018 high/2020 low range at 132.05 is also possible. Should euro to Japanese yen rates trade into the 132.00 area, selling opportunities would be explored. Euro to Japanese yen. Retail trader data shows 39% of traders are net long, with the ratio of traders short to long at 1.56 to 1. The number of traders net long is 14.62% higher than yesterday and 1.67% higher from last week, while the number of traders net short is 10.14% higher than yesterday and 12.43% higher from last week. We typically take a contrarian view to crowd sentiment, and the fact traders are net short suggests euro to Japanese yen prices may continue to rise. Positioning is less net short than yesterday but more net short from last week. The combination of current sentiment and recent changes gives us a further mixed euro to Japanese yen trading bias. The .fil #B26724.fil #FFF.fil #F78F1F. Quiz. Discover what kind of forex trader you are. Start quiz. Whereas euro to pound sterling rates the most muddled outlook among the three major euro crosses in late December, the pair has experienced the clearest directional bias over the past 2 weeks. The pair is now below its daily 5-, 8-, 13-, and 21 EMA envelope, which is in bearish sequential order. Daily MACD has set a relative cycle low, confirmed the drop by euro to pound sterling rates to their lowest level since February 2020. Daily slow stochastics are nestled in oversold territory, enhancing the view that bearish momentum is reliable. Further losses towards 0.8282 seem likely in the near term. Euro to pound sterling. Retail trader data shows 79.2% of traders are net long, with the ratio of traders long to short at 3.81 to 1. The number of traders net long is 5.6% higher than yesterday, and 31.78% higher from last week, while the number of traders net short is 5.05% higher than yesterday, and 3.7% lower from last week. We typically take a contrarian view to crowd sentiment, and the fact traders are net long suggests euro to pound sterling prices may continue to fall. Traders are further net long than yesterday and last week, and the combination of current sentiment and recent changes gives us a stronger euro/GBP bearish contrarian trading bias. Written by Christopher Vecchio, CFA, Senior Strategist.